Hey guys, Dave Santarelli from the Santarelli Trading Exchange. I just wanted to do this live update. We're starting something new at TSE. We're focusing in more on video content and video updates. And so this today is going to be our first of several videos. We're going to start doing daily videos, like I said, live videos in the morning, a live one at the end of the day, and then we're going to edit one and make a great one for YouTube that's going to be posted daily. Okay, so today was a big day. First off, I want to go over the Brazilian markets. I went over that in pre-market hours. I went over that Sunday as well. And as you see, Brazil just had their presidential election, and Bolsonaro was the winner. But now, since he didn't get at least 50% of the vote, there has to be a special second election. And that's going to be taking place on October 28th. So once that takes place, we've seen Brazilian stocks here. They had a big 21 to 30% pop today. I said yesterday in videos, even last week when we were trading Petrobras, I said Brazilian stocks are going to be the ones we want to focus on and see for some momentum trades, because this is what I'm thinking in my head. Brazil's been going through a really rough time. They've been going through a recession, depression for the past several years. You can see their stocks are at lows. This new president, they've stated that they want their Trump. So Ms. Bolsonaro, I think it is, he's one of the richest men in Brazil. He owns his own businesses. So they're looking for their Trump, and they think this guy's going to give it to them. So just like our markets, when Trump was elected, we've seen a huge takeoff from our markets. The Brazilian reais, their currency, has dropped to levels that we haven't seen in years. So I do believe this is a great time to enter long into positions. I'm not a financial advisor or broker, so that's a disclaimer. But what I'm looking at here, I'm going to show you some charts later on in the edited video for YouTube, is we're looking at EWZ, BRZU, Petrobras, and stocks like that. Even Embraer and some of the Brazilian bank stocks look really good right now. So we're going to be focusing in on those for the next few days, few weeks. Those types of trades are going to be a little bit longer term trades, maybe 3 to 8 months, 9 months out, but they have possibilities for very large returns and what I feel is very little risk. If the other candidate is elected, Haddad, he has ties with Lula, and you know, Lula's in prison for corruption with the Petrobras scandal and everything like that. So that other guy wins, we would immediately exit out of these positions and stay away from them. But as the looks of it right now, Bolsonaro looks great, and he looks like he's going to win. And like I said, October 28th is the second election there. All right, so that's enough with the Brazilian markets. Now let's talk about our markets. Dow was down 1 point over 200 points, and it was looking to be a rough day. I told members last week at TSE in the trade room, this looks like, and even in our newsletter we sent out this weekend, our newsletter was stated, is this a shakedown or a meltdown? Because, you know, just like in Washington, just like in politics, there is corruption in the markets. I'm telling you, what these fund managers do, hedge funds, large funds, what they'll do is they'll buy stock with options. They'll sell their shares, and then they'll buy some calls, and then they'll pump up the shares with their dollars from their funds, and then their options end up making exorbitant amounts of money, profits, and then they sell. You know, trust me, it happens in the market as well. Everything that's going on with our economy right now, it looks great. Our job numbers are great at 69-year low, I think it was. And unemployment's low, more money in household income. Everything looks great with our economy, and we're going into a strong holiday cyclical trend here. So I think what we've seen the past few days is some just profit taking from some large funds to clear up the quarter and leave their clients with some profits. Because look at this here. If we're looking at the DIA chart here, we see it's a classic, one of our top 3 patterns that we trade at TSE. And if you guys know, we have the hook pattern, breakout momentum, and then range channel bound patterns. This here is a breakout momentum pattern on DIA. If you're looking at this, if you're at home and you want to do this, you could set up the 20 and 50-day SMA. I have the blue as the 20-day and the red is 50-day SMA. And you can see here on each of these waves higher, and then on the profit consolidation phases, you're seeing that it's either coming back to that blue 20-day SMA or sometimes down to that 50-day. And as you can see, the past 2 days for the Dow, we had huge sell-offs, 200-300 points each day. And today we ended the day with the Dow up around 40 points. So tomorrow, if we see a confirmed bounce tomorrow on the Dow, that would tell me we're in that next wave and cycle higher. The reason why 90% of traders fail is because of this reason. And I want to make this clear to you guys because this is extremely important. If you have a tough day like today and you're exiting your positions or you're getting worried, this is the time when you're fearing that the large funds are coming in and buying. So, that's what we have to be on the lookout for. If we see continued selling pressure tomorrow, then that's a sign the markets are going to head lower and we have to adjust trades, possibly buy some puts. But if you're seeing here on the same type of channel I'm looking at, so far we had a bounce on the 20-day SMA on the Dow, and we'll see what happens tomorrow. This is what specifically I'm looking for. Tomorrow, if we see a low, lower than today's low on our candlestick today, so if tomorrow we have a candle that's lower than today's low, that's going to be a sign for me that the markets are heading lower and we're not finished selling off. If we have a green candle tomorrow and we're above today's high by the end of the day, then that's a sign to me that we've finally finished selling off and we might enter into some positions that were oversold in the past few days here. So that's what we're going to be focusing in on as far as Diamond ETF, the Dow. And now let's take a look at Qs. Now, Qs is a little bit of a different story here. Tech's seen much more selling pressure than the Dow did. Tech broke some major SMAs. It's shattered through the 10, 20, 50-day SMA. It even shattered through major support today at one time. But it quickly rebounded, and we are well off today's low. So tomorrow is going to be interesting. We get a green candle there. That's going to be a sign of a good buying opportunity and our next wave higher. So like I said, guys, it's very simple. If you're following the three main types of chart patterns we follow, the hook, breakout momentum, and range channel bound charts, you'll be able to pick precise locations for entries, targets, stops, and areas you want to exit and take your profits. So that's what we're going to focus in on. Also, one last thing I wanted to go over quick are the banks. So as you see, the big reason why they're seeing in the markets, we're seeing the selling pressures because of the fear of higher interest rates. Okay, now we have some big banks reporting earnings this week, this Friday. JP Morgan Chase, for example, JPM, that has earnings this Friday pre-market. And what we can do if we want to make an earnings trade, because I was looking at the bank charts here, and if we look at Bank of America, for example, we had a nice base off of this recent phase here, and what we can do is we could take advantage because Bank of America has earnings next week. So this is called a piggyback trade that we do at TSE, the Santarelli Exchange. What we'll do is we'll find a stock like JP Morgan Chase that has earnings on Friday, pre-market hours, and the options for that, the premium, are much higher because the implied volatility is higher on a stock that's reporting earnings that week. So since Bank of America is not reporting earnings until next week, their options are cheaper this week because they have lower volatility. That's what's called a piggyback trade that we make at TSE. So if we bought a JP Morgan call, for example, if we thought we were going to have a run-up before earnings, the markets are rebounding a little bit here, and we also like the catalyst for the bank sector, the financial sector, what we can do, instead of buying JP Morgan Chase calls, which we're going to be paying a higher premium for because the implied volatility is much higher. Like I said, the extrinsic value is going to be higher on calls for JP Morgan because it has a higher IV. So instead of doing a call on JP Morgan, we do a piggyback trade on Bank of America. So their option premiums are much cheaper. And if we get that quick little swing move that we're looking for in 2 to 3 days prior to them reporting earnings on Friday morning, we could sell, lock in large profits, and move on. So that's what we're looking for. We actually made a little bit of a trade on Bank of America today. Small little trade, just as a swing trade here. And then some other members asked about Costco. Costco's been one we've been trading in the trade room. Let's take a look at Costco. Costco, members were asking me if this is a hook pattern, and this is great when members are interacting in the trade room because then it's telling me that you guys are learning, you're picking up some of the things we're watching. Costco is a great hook pattern here. So as you see, we have the base here. We have the base around 220 a share. What we're looking for now is resistance. Is there any resistance from the top where it was to the shaft base of the bottom here? And like I say, usually we're looking for a 50% return from the highs that before it dropped. So if we're looking here, we had highs of about 235 a share, okay? So that was just on October 3rd, we were at 235 a share. Now we're at 223. So what we're going to do first is look and see if we have any resistance up there. We do. We have resistance around 229. So that means, and this hook pattern, tomorrow would be our confirmation buy. So if we see a green candle on Costco tomorrow, we would go out by the November 16th. We would buy either the 220, 220, 250, possibly even the 225 calls for either October 19th for a higher risk trade, or if we want to save for a lower risk trade, we could buy the November 16th 220, 220, 250, or 225 strike calls for November 16th monthly expo. And our target is once Costco completes that hook pattern, which like I said, since we have resistance around 225, we would have 228, 229 as our target area for that trade. So that's what we would look for on a trade at Costco. So if we get that confirmation tomorrow, we'll be making a trade on Costco. Now, another stock you guys talked about, Salesforce. This is a great stock I posted a chart for. I want to go over this quick. If you guys look at Salesforce, CRM, this is a classic breakout momentum chart pattern. As you can see, I wrote here, each time Salesforce has pulled back to the red 50-day SMA, it has been a great buying opportunity. After that drop, about 1 month after that drop down to that 50-day SMA, you're seeing within 1 month it hitting those new highs of the waves before that next consolidation profit-taking phase. So it's a great opportunity there to buy some calls for at least 30 days plus out for Expo, and then once it gets that bounce, that confirmation. For example, tomorrow, if Salesforce again has a green candle, the low is not lower than today's low, that would be our buy opportunity. That would be our confirmed entry. And like I said, what we're looking for then is a wave up to either that 155 to 160 area, and that's where we would take our profits. Again, I had classes before on the 3 major types of patterns we trade at TSE. If you want to go see those, there's a 2-hour video on YouTube for those. The details, the details down to a T, when we enter, when we exit, what we're looking for. So if you want those details, you can go check that out. But Salesforce here, as you guys can see, it's looking great. Possible entry coming up soon on Salesforce. One other one here, Visa. Someone asked if Visa was a hook pattern. Okay, now Visa could be a hook pattern. As you see, we had about 5 days of continued selling pressure, red candles here. The stock dropped below the 50-day SMA, which hasn't happened in several months. So you don't jump into a stock like this. You're not trying to catch a falling knife. You try to catch a falling knife, you're going to get stabbed, you're going to bleed, and you're going to hurt yourself. So what we're looking for here first is a confirmation. And like I said, if you're looking, the charts are telling us everything. We're looking at the patterns and we're seeing what the charts are doing. As you can see, they're basically identical to what happens. If you see here from September till October 8th here, there's one set, there's one phase. And then if you go back here, just like this, it's the same identical thing that's happened. If you go back again 1 month, it's the same phase that happens. So when you get familiar with knowing how these patterns work, you'll know when your entries, your targets, your stops are. And this is what we teach at TSE, and this is what we go after. So one other stock here, Amazon. This has been one that has been a troublemaker the past few days. As you can see here on the stock on Amazon, we blew through. If you guys remember, I gave a definitive stop chart on Amazon. I said if we broke that 10-20-day SMA, that would be our stop on our weekly calls. It hit that on either Thursday or Friday, sent that out in the trade room, and ever since that, it just continued to drop. It even blew through below the 50-day SMA, which we haven't seen that on Amazon in probably years, I would say. Okay, it happened back once in April 2018, and then again back in early 2017. So Amazon is well off the lows today. I like the looks of the candle today, so we're going to see what happens tomorrow with Amazon. If we see a bounce there, it could be a good buying opportunity. Like I said, guys, don't make rash decisions. These market makers, they're trying to get you to dump, and then while you're still dazed and confused, not knowing what to do, if you're looking at your stocks and you're seeing a down day like today, then they're buying up because you're taking a loss because you're worried that the market's going to tank. Like I said, just watch, see what the markets are doing. Watch, because they shake people out, especially retail investors, and then they'll start buying aggressively again. And like I said, you could see that on the chart of either Diamond, ETF, or any other. You can see there's always 3 days of selling, and then we have that next wave higher. So, you know, you could see when the hedge funds are selling, the candles are much larger, the volume is much larger, you know, and you could get an idea of these patterns and take advantage of these patterns that you're seeing. So that's what we're going to see. If we see a rebound tomorrow, we'll possibly enter into some new trades that we talked about in the trade room today. If not, like I said, then we're going to start looking at some alternative trades. But right now, focus is on financial sector, Brazilian economy. Healthcare is an outperforming sector, and that's great. So we'll keep doing that, guys, and I hope you guys like these new videos, and stay tuned for the YouTube video that's going to be posted today in a few hours. If you guys like this, please give some comments, updates, give us some suggestions, what you'd like us to add in these, and we'd be happy to start doing that. Thanks, guys. Have a great night. God bless, and take care. If you have any questions, just comment below. And if you want to sign up, please join us at thesantarelliexchange.com. Use promo code Brazil, all capital letters. Thank you, guys. Have a good night.